I guess the issue that people definitely bump into is in the identification and the closing timelines that are set out in the 1031 requirements. So that's always a bit of a struggle.
What's been the biggest frustration for yourself, partners, family when it comes to the 1031 exchange or lack of capital gains tax deferral options for highly appreciated real estate?
Yeah, it's kind of annoying, isn't it? I mean, so fundamentally, I'm in a transactional business where we're paying, for the most part, an ordinary income tax, and that's frustrating. In terms of tax deferment, our rentals defer some of our income taxes, tax obligation, I suppose. We've done a lot of 1031s, and I think it's a great wealth and legacy building opportunity. We've made. I think my favorite deal probably is a deal I bought in the bottom of the market. We spent 45K for a deal in California, actually, in Hemet. Put 10K down, had a hard money loan for the other 35K. It's kind of crazy, right? And a property in California.
It
Appreciated,
is.
sold it 3 or 4 years ago, I think, and then sold it for 130 something or another. 1031 that money into a property that actually our company sourced out here through our marketing, and that property's worth 225, I think, right now. So no capital gains tax on that one. That's nice. I don't know, it's fun anytime you can turn 10K into 225K without really a whole lot of risk, then and without the tax obligation, it's awesome. So I think it's a fantastic tool.
It's an amazing tool, right? Especially if you have a deal lined up like that, right? And you were able to buy low and find an
Mhm.
opportunity. The challenge becomes when you can't, or you run out of time or you don't have that thing lined up to roll into that. Have you ever, I don't know, the 112 unit that you bought, and maybe you still own it. But have you sold anything larger and faced the 1031, or is it any challenges with that?
Yeah, sort of. It's more of a family thing, really. We sold a large property in California back in the day, and we 1031'd out of it. And yeah, there's definitely struggle. What I liked about that single family deal, definitely that you kind of touched on, was we controlled pretty much every aspect of it. So we controlled the sale, we controlled the acquisition of the corresponding buy property. So the timeline wasn't really an issue for us. I guess the issue that people definitely bump into is in the identification and the closing timelines that are set out in the 1031 requirements. So that's always a bit of a struggle. I mean, there's a risk of, I've seen other investors where they get put into maybe deals that they maybe really shouldn't be in because they think that they have to place their money in a certain time frame. So I think there's a lot of kind of lack of understanding about the urgency and requirement for knowing what you can place your money in. I know what on the commercial side, sometimes folks say, "Oh, 1031 money." They think, "Well, that means that I can charge you more because you have to buy my property." So there's a risk to that without knowing kind of what you're getting into. People don't really talk about that side, do they? That much.
Yeah, no, that's exactly right. We call it the shotgun wedding, right, TJ, where you got to get engaged in 45 days and married in
Yeah,
180. And when the seller knows you're in a shotgun wedding, you're probably going to make the best decision. And oftentimes you're buying something that you wouldn't necessarily purchase if it wasn't for the tax tail wagging the investment dog. We liken
sure.
that to blockbuster way of doing things, but there's now a way that's pretty cool. It's called a deferred sales trust. We liken that to Netflix. There's no more timing restrictions. You can buy and sell whenever you want. You can get a brand new depreciation schedule by partnering with this thing called a deferred sales trust. You can
Hmm.
also just sit and wait till a deal actually comes up. You can do hard money lending. You can invest in securities. I have a client. We just did a $2.6 million deal in Alabama. He sold a business which doesn't qualify for a 1031, and he's building 70 multifamily units, all tax deferred in Tennessee, which is pretty remarkable, right? So it's kind of like you can 1031 out of just about any asset, and you can invest it into multiple assets to diversify. It also works for cryptocurrency. By the way, you can learn more about that at capitalgainstaxsolutions.com. That's capitalgainstaxsolutions.com.